growing $200 to $1,000 and seeing how long it takes. My name is Kirkland. I've been trading for about 2 years. I've been break even on demo for about 7 months, and I have been profitable for probably the past 2 months on demo. I'm not rich. I work 2 jobs, and I'm for some reason trying to make an income from trading. In my first year, I've lost 20K. I had somebody that let me trade with their capital, and I've lost 20K within the first year, which is insane. And with almost $1,000 of my own capital, I grew $800 to about $3,500 in about a week, which I posted on my YouTube. I forgot to mention how I'm trading is, since I have a small amount of capital, I'm only starting with $200. What my strategy is all I do is on the Forex market, I just trade with 1-to-1 risk-reward ratios, and all I use is support resistance on the higher time frames, aka the daily. Every now and then I get a little freaky and trade on the 1 hour and the 4 hour. When a trade is already going into profit, I just add into profit. In the previous position, I just moved the stop loss to break even, so I break even on that trade. The second position stays open, and it's like the first position just with a shittier entry. I'm just going to compound using this by adding into winners. With only a 1-to-1 risk-reward ratio, I'm risking 10% per trade. I cut losers early, and I let the winners run for as long as I can to make the most profit possible. This is what the account looked like on April 6th. This is when I started the account. I had to load it with Bitcoin because I'm trading on a unregulated broker, so I had to transfer with Bitcoin. I lost a little bit of money during the transfer, so it's only $195. So to get into it, this is the first trade I took, EuroCAD. It was 2 sells. I add into winners. So in EuroCAD, you'll see 2 positions, 2 for 0.03 lot sizes. Right here, you can see this gray zone was a resistance zone that I thought. So I sold, EuroCAD went against me, and I elected to close it early. So I risked $20 on this trade because it's 10% of the account. As soon as I saw price broke above the resistance zone, I just elected to close early so that I could save my capital. So I'm glad I closed that trade early because I would have lost $20 instead of 10 bucks. On GBP AUD, you can see I bought at a break and retest of a daily zone. The gray box is the support zone on the daily. I waited for a break and a retest, and I bought there. That trade ended up going against me, so I closed that one early, which is why I lost $10.78. The next trade I took was on the Dow, aka the US 30. Also, keep in mind, when I place this buy limit on the Dow, it was around 4 o'clock. Around 4 o'clock is usually when session changeover happens, swaps are higher. Also, there's a lot of volatility. Volatility. And so I guess me placing a buy limit and there being a lot of volatility around 4 o'clock, it gave me the shittiest entry possible on the Dow. On the Dow, one characteristic of this market, been bullish for a long time. So I would say your bias would be better to buy instead of sells. So I took a buy, I added into the position when it was winning, and it ended up being like a $52 winner, which was great, which now we're in profit. And then you can see on USD CAD and AUD CAD, you can see on USD CAD, I ended up selling. Those were some positions that I was in at this time that didn't end up closing. I did take a USD CAD sell. I kept adding into the winner. Some of these trades hit break even because I moved the stop losses as I add into winners. I moved the stop losses of the previous positions to break even so that I don't really lose anything. These closed at $3 and like $2. And then this AUD CAD sell right here, this one's important. I sold on AUD CAD, which looked like this. So you can see over here, this blue arrow is where I bought initially. Price kept going against me. So what did I do? I closed it early because I didn't want to lose 20 bucks. So instead I only lost $5. And you can see that if I kept it open, I would have lost 20 bucks. Here's a screenshot of day 2. I woke up on April 7th, and this is what my terminal looked like. The sell I added on AUD CAD, the Dow US 30, that is what the position was looking like. The US 30, aka the Dow, that is how much profit it was in at that time. For markets like the Dow, I really just let those run for as long as I can. Those typically do run longer than your average. At least for me, since I'm just risking 1-to-1 risk-reward ratios, I typically just let those run. So above, you can see USD CAD. I had sold on those. There's a second position of 0.09, which I added into it. The position with 0.04, I moved that stop loss to break even. So if USD CAD does go back up to the entry point, I'll just break even on that trade. But the 0.009 will still be open at whatever profit it's at. So while I was at work, I sold AUD CAD. My alert went off on TradingView. My alert went off. It was a perfect break and retest. So I entered right here. Again, The gray zone is what I think to be a resistance zone, so I sold. And as you can see in the screenshot, it is almost to the TP, so that one we're waiting for it to close and we'll make 20 bucks. In this screenshot above, this is me explaining why I bought the Dow. Literally all I did was I went to the 4-hour time frame. Again, I worked 2 jobs, so as I was working, my alert went off for a break and retest. I actually set a buy limit because with the Dow or the US 30, I'm confident in those trades. So I placed the buy limit, and you can see the first blue arrow, it is really high up on that green candle. At the time, it didn't look like that. Price had just broken above the zone. I had set my buy limit and also set an alert while I was at work for when it went off. Next thing you know, I open my phone and my position is way up there on the green candle, as you can see. So I got a really shitty entry, but thankfully I'm in profit, and I ended up adding into that one because I was in profit also. The stop loss in the first position is at break even. On the second position, the 0.02 lot size, that one stop loss is right above the first position. So lastly, I'm just gonna explain the USD CAD trade. This is the screenshot. It looks a little messy, but I swear it's a lot more simpler. The gray zone, the gray area, is what I thought to be a resistance zone. I went down to the H4 time frame so you could see the specifics better and where exactly I entered. The first position, which is that 0.04, you can see the arrow that is right there at the very top. That is where the first position of where I sold at. And then this 0.09 position is when I added into profit on USD CAD because it looked like it was really gonna fall. And so you can see down here, my target profit for one of the positions is 100 bucks. So because I'm using a small amount of capital, I'm not trying to be a hero and gain 1,000 pips in one trade, but I am trying to let my winners run as long as possible. And so I'm okay with my target profit being down here. I can manage it. If it gets to 50 bucks and looks like it's gonna turn over, I'll just close it there. I'm not really aiming for 100 bucks. It's the best position to have if it does hit, but I'll probably end up electing to close it early if I do. So quickly, I'm gonna show you the screenshot of when I first started the account. The balance was 182, so I ended up losing some trades, and these were the positions that I was in. So I was making 3 bucks at the time. This screenshot is currently where my terminal sits. So right now, if I were to close everything, that equity, my account would be at 365 bucks. At the time of that screenshot, it might be a little different now, but that is day 1 and day 2 of trying to grow an account from 200 bucks to 1,000 bucks. Thank you.